Okay, there
Okay,
we go, Roger.
good
Cool.
stuff. Thanks very
Thanks.
much.
Enjoy your
Cool.
TR.
Go well.
Bye.
Thank you. Cheers. Bye. Okay. Right. I think I know everybody, so everybody knows me, so I don't have to explain who I am. Everyone knows it's an interactive forum here. Okay. Right. Let's go over and get started. Morning, everyone. Shoot. Nearly finished it, so it shouldn't hold us up too much. I've got the headphones on, so it should be a problem. It will start to ease off, so it should be okay. Uh-oh, what's happening now? I just saw something flash across me there saying internet's unstable. Well, I'm down, up and down. I'm up in Joburg where the internet's extremely stable. And I'm just staying for the week at my host. And they've got quite an expensive high 50 megs a second job. So I don't know why that should give us some problems. Anyway, just hope it's okay. Righty, just letting everybody in. Good morning, everyone. Just can get started now. She's any time just got to stop a second to admit people, but that's fine. That's great. That's what we want. Okay, I got a couple of trade ideas out. Let's have a look. Just let these guys in. Just have a look. Where are they now? Okay, JPY. Now we had a bit of a problem the other day out, and then despite the fact I said the yen's looking a bit. No, I'm not. JPY. Yeah, that's better. It's a bit wrong way. Look, I'll put it on 15 to start with. A bit strange, but I just felt. I know the oil I'm pretty bearish on. It seems to be coming off a little bit, but it's come off over the last 3.5 days. It's only half a day so far, or a third of a day anyway. It's 320 pips, and there's quite a bit of support down here. And like I mentioned, I think it's getting the stage with the Canadian, even though it's been a bit weak lately, is a bit undervalued. And I think the Japanese yen is a bit overvalued for the moment. So I thought there's a possibility of a bounce. We had one earlier on, actually. It seemed to be coming back off again, unfortunately, but it was getting a bounce. Maybe we jumped the gun a bit. I'm sorry if we did, but I just thought, hang on, support. Not just me, other people seem to think there's a possibility there as well. So yeah, I hope it's not going to come back and kick us. But yeah, because the entries of oh God, we're 25 pips in the red already. Let's look at the 4 hour. Yeah, it's. I thought actually when it came out, there was some buyers coming in, so it wasn't exact. There we are. Some buyers were coming in the hour when we looked at it. So I thought, well, we get a bit of a bounce. I wouldn't give up on it yet, but it's a bit surprising because it's such a big movement down. We've had some. I know we've had a couple of issues with the Canadian, and I mentioned earlier, well, yesterday. But there's a stage where, as I say, I would assume that'd be undervalued, so maybe it'll come right. Okay, just keep your fingers crossed. Just select the line graph. Okay, so where's this one now? Where? Oh, here we are. Yeah. Well, there's a bit of support there, a bit of support there. Hmm. Okay. Hear you. Hear you, I'm afraid. We shall see anyway. Okay. Right. On to the next one. Euro CHF. Get a bit more there. What was the entry there? 76. One pip. We can't shoot. Remember, we sell on this level here, not that. That's the spread. It's only one pip. It is a bit of resistance there. I get it's a neutral, so that's okay for a sell. And you're again mentioned as being fairly strong lately, but again, I thought that might be a little bit undervalued. Having said that, I've got a long on the euro on the AUD, short on this one. So there's a little bit of a hedge being created there. I thought that might be okay from that point of view. So EUR AUD, we'll just quickly look at that. And that was the entry at 6680. That's come off. That was doing okay a minute or two ago. What happened there? Yeah, it was doing okay just now. Hey, look at that. Okay, right. Sorry, guys. Stick with it. But I'm going to be honest with you. The market is incredibly difficult at the moment. I know I've said that before. It's not an excuse. Sounds like sour grapes, but it is. Sorry about the racket. Hope they'll finish just now. But yeah, it is incredibly difficult. And it's just the heck, I'm just letting this pass out the way. Just about done. They're coming once a week. Won't be too long. Yeah, it's incredibly difficult because, uh, uh, as I say, it's not just me saying that. It's just trying to get some sensible direction. And yeah, a lot of people obviously get a bit upset about it. I'm saying, well, it's not necessarily mine or our fault or whatever. It's just very difficult to pick any specific direction. And I still think there's overdone euphoria on that CPI. I mean, the difference between the actual and the expected wasn't that much, 0.1%. Everyone's saying no more interest rate cuts, and getting a bit of euphoria because they want some good news, I suppose. It's like over in South Africa when you hear something working, it's good news, and that's good. Yeah, we all sort of so pleased to have some after all the negatives. Maybe we get a bit over the top and excited about it. I don't know. But as I say, technically speaking, this is not too bad as a buy. The euro is reasonably strong. The AUD is, well, it's okay. But anyway, I thought they were okay. But we shall have to see. Well, I'll give it a good example is yesterday's trade. One guy called me up. I like the trade very much. You probably won't call me up and say the same thing now. Look how it's jumping around. This one here yesterday. Look at it now. We got it there. It came down to what are we on the daily? It came down to that's right. That's right. We put a short in there. Came down here. I've decided to bounce up. The dollar at the moment came off a bit more than even I expected, but now we're starting to get a bit of a bounce. And it seems to be maybe the 103 on the dollar index hopefully will hold and we get some Sandy coming in because, yeah, we understand a bit of dollar weakness, but is it that weak? I mean, are we going to get this interest rate decrease? I'm almost certain we're not getting an increase in December. That's almost red. But I don't think it's going to be out of the question that we might hold on to the similar story. And if inflation gets out of hand to the next month's CPI, we possibly might put it up again. So I think it's sure, these sort of times. I'm going to be honest with you, as you can probably hear, it's frustration more than anything else. So just take it easy, your position sizes, etc. And don't go in all in. That's all I can say. Okay. I'll be honest, Gerard, good question. Normally I'd say not, but I'm thinking anything's bloody possible at the moment. You know, anything's bloody possible. Look at oil. The likely it'll be extended the 1 million barrel per day pullback or cut, should I say? Might be. Let's see, I've got it written down somewhere. Trying to the better English I'm looking for. The cuts to earlier made now cuts. I thought it was a better word. I had one. Anyway, the 1 million barrel per day cut there a couple of months ago. The thing might be a possibility of the OPEC meeting coming on the 26th of November, that they might extend it. The big question now, if it comes off a bit more, the oil that is, they might start to say, never mind just extending it, we might do a further cut along with Russia. Now, Russia needs that money. They're not producing much. So, well, I suppose Saudi Arabia, they've got a lot of costs, but they're not quite the same. So will they agree to another cut? We shall see. But as I say, at the moment, oil is a bit on the bearish side. But I think it's, as I said before, I can't see them staying around with the 75 or below dollar a barrel on the Brent. Obviously, the others are cheaper because they need that income. And as the producers probably will have to make choices to create another demand bottleneck to try and push the price up by pulling back supply. We'll see anyway. But yeah, so to answer your question, Gerard, normally I'd say not unlikely. Normally I'd say 103 is likely. A bit of sand will come in and we'll get a bounce. And remember, it's a tradable instrument. Some buyers might start coming back in again. But just lately, I think anything goes. Just be a it's getting quite stressful, to be honest. Well, certainly I'm finding it quite stressful. You know, he starts off at a hero and then the thing turns on its backside. Now what's going on? And the problem that leads to take the profits. You get a trade idea out and you aim for a specific target. And I keep saying, give the trade a chance, don't take profits too quickly. And now you're kicking and saying, well, hang on, Roger. I wish I had taken profits too quickly. Now look at the bloody thing. And I haven't got much to answer on that one. You know what I mean? So it is, yeah, roughy toughy. Yeah, we're not being hammered the other way around. Hammered in position going short. But yeah, let's go to the Dow. Where's the Dow? ABCD. Oh, here we are. Go to the micro on it. Yeah, again, I thought 35 would hold. I thought attract some sellers. It's easing up a bit. To be fair, the AI guy, because of them, what's his name? He came across a so-called expert. They added quite a bit to Microsoft shares. NVDA come out later on today. We'll see if they're doing well. Am I going to jump on that? The two of them are big enough to get some sort of movement upwards on the NAS, and because they're big in the Dow as well. How long will that be sustained? I don't know. But anyway, we're still in the Dow, and I'm going to stick. I'm going to stick with a strategy on that. I Gerard, guys, I think does that? Do you think you're going to start attracting many buyers there? I mean, would we be comfortable to buy at the? Maybe I'm missing something here, but I think most people, certainly myself, would be pretty, to me that's pretty high up to be starting to buy. And we're talking about buying near the ceiling. I'm wondering whether it should we be buying at these levels? No, it's nearly 3,000 pips movement in basically a month. Is that right? Less than a month. I think that's maybe I'm talking rashly in an emotional situation, but I think that's due for a pullback. Okay. Thanks. I need a bit of support, Carol. I'm getting a bit down at the moment. Thanks. A bit of moral support. Might not put money in your pocket, but certainly help my psychology and the price of therapy. I'm missing something. Maybe enough people say, yeah, collectively they would push it further up, but I'd be nervous to buy at these levels. In fact, I don't know. You're in this one here. Hypothetically speaking, you'd probably looking to take your profit. If you got in around about these levels here, you'd be very nervous to hold on. You'd be thinking of maybe exiting, wouldn't you? I don't know. Strange. Okay. Very strange. Okay, so we'll just have to take it easy. As I mentioned yesterday, don't forget Thanksgiving is on Thursday in the US, which means they have a half day on Wednesday and a half day on Friday. They've got to keep the markets open for the weekend coming up. They can't have them closed for 4 or 5 days. So they just come to the desk and then hardly any trading before they rush off to get the train, plane, boat, or whatever to get to where they want to go for the Thanksgiving, where they all get together, family, and eat the poor old turkey. Then they obviously have a couple of toots and have a bit of a hangover going in. And then on Friday, they do their little bit of thing, probably not big trades, going into the weekend on top of it, knock off at lunchtime. That's how it works. So I think it's going to be very quiet. Don't, guys, expect too many trade signals coming out. If we find some, we will definitely send them, but don't expect fireworks. And we're doing the best we can. But in all honesty, it's if you think it's frustrating, it's for all of us. And you might say, I'm just starting. What am I doing wrong? Well, I don't care. I've been doing this for 50 years. Hey, Gerard, Fadi, you know what I mean? It is getting quite strange. Some of you guys might say, well, I went that way, did well, haha. I'm not sure. Might be sometimes a bit of luck involved, to be honest. Yeah. Anyway, maybe I'm just making sour grapes. Okay. Yeah, the dollar's popped up a bit, and I thought we're getting a bit of, and then it's popping off. It doesn't seem to know. Okay. It's just, what do you want? You're getting on a bus. Where do you want to go? I don't know. Okay, well, just sit there and pay me some money, and then we'll travel along, get off when you feel like it. Francis WhatsApp me says he's got no audio his side on Zoom. I'm not sure if it's his side or you can't hear me. Can you guys hear me all right? Can anybody not hear me? Or you wouldn't know if you're not hearing me. I get that. But those who can hear me, can you just sort of say you can hear me? Thank you, Gerard.
We can hear you. We can hear you.
Thank you. Thank you. Sorry, France. I better say it is your side. Good. Let's just put this just a second. Just put this up for him. So sure, I've just because I obviously can't tell him because you only hear me. Yeah. So I've just printed out it's on your side. Okay, we're not stopped out. What's the 15 minutes say? Good stuff. Simondini, good stuff. Okay, maybe we'll get something there, but who knows? It comes down there. Hey, we get excited, and then the thing pops up again, like the pound dollar. I mean, that was going beautifully. Hey, that was going really well. We're on the 15 minutes, excuse me. Yeah, it's going very well. When we got in there, it's going beautifully. All right, I suppose he did bang there. Okay, but then it took this out. To me, I'm worried about this. That's technical damage. It opened up above there in the buy zone. So now I'm worried about it, to be honest. Doesn't come to rescue. Oh, you can hear me now. Good, thank you, Franz. And only I'm hoping for that the deer starts opening up.
This meeting.
Okay, I've got you. Come in broken there, Franz. Okay, I've got you now. Yeah, what was I going to say? Yeah, so even though there's technical damage there, I'll just pray the bloody DXY goes up and get a bit of a short there. But anyway, yo. You see a downside reversal down as FVG already taken. Sorry, Spiders, what's FVG? Zakili, what's FVG? Does anyone know? Maybe I'm a bit thick here. Can somebody help me on an FVG? Oh, fair value gap. Beg your pardon. Okay. Well, in English, you mean you're expecting downside, or what are you saying there? Okay, downside reversal. Okay, downside reversal. That's the question. Yeah, okay, I see your point. Well, we've got a short one, so hopefully you're right. In fact, that's backing it up, so that's great. Right. Back to Phoenix Stars. I funded my account. How do I set the set? Right. There's three things I'll mention. Not stable. No, I want. Don't. Sorry, this one. Capital. The capital. And I assume you got the right equipment. You're on Zoom. That's fine. We need the knowledge. One of the major number one steps you need to do is you need how to place a trade. Now, the trading room is not to teach you how to operate the platform. This is to discuss trade ideas between ourselves, learn about strategies, and answer questions to clarify appertaining to trading. It's not, and it's certainly not to teach you platform trading. That's incumbent upon the individual to learn how to operate the platform. Now, a lot of companies don't give platform training. They assume you can play around and do it. We, however, do, and it's 6:30 on a Monday evening. 6:30 on a Tuesday is the position size calculator training, and then you get the Forex indicators or whatever on Wednesday, Thursday. Now, there's a lot of people, you don't attend the classes, well, you're going to have to read through. It's a bit of a pain. So I suggest you can attend the classes. Anyway, it's on again next Monday. It's position size calculator tonight, but Clinton does it. And if you're not trying to place a trade, I'm sure you can take time off. If you ask, interact like you did, Phoenix, you did that, which is great. Ask the person, say, look, I've funded my account. Please help me to place a trade. And he'll show you how to operate the platform. Just tell him what you're on. You need on both your laptop and your phone. But but he'll normally teach you on a laptop, and then you say halfway through on a phone, slightly different configuration. So you need to directly explain that. But unfortunately, this is not platform training. This is where we assume you do know. So when you get a trade idea, the idea from the trade room is to look at it, and you might not like it. I mean, Ebenezer traded a bit before. You might look at that and say, nah, he would send you a signal out, but I don't agree, he won't do it. A lot of people, that's more than fair. It's a trade idea. It's not a must do. But that being as it may, even if you do just follow the signal, that's fair enough. But you do need to know how to place it. And unfortunately, this is not the venue for it. It's for getting a platform training. I'm fantastic feeling. I want you to bring it up so I'm explaining to everybody and make sure everybody fully, clearly understands that. Platform trading and the classes are there. And then when you got the basics, you come here. Just 1 second. Hello, sorry, I'm on a Zoom. I can hardly hear. I'm on a Zoom doing a training room at the moment. Can you contact me after 11, please? And then I'll assist you. Okay. Thanks very much, sir. Just bye. Now, just quickly, won't give any names out, just saw somebody flash on WhatsApp, I'll speak to after 11 o'clock, saying, I'm almost blew my account. If you almost blew your account, two things are telling me. Number one, you haven't got much in your account to blow anyway, so even the minimum position size you took was too big, or you overexposed. You can't blow your account on one or two signals. You should always make sure you got your volumes correct. Anybody says that they've blown their account on a couple of signals, that's not correct. You can't go into a trade if that trade goes pear-shaped and it blows your account. This is not equities. This is not savings account. It's not bonds. It's not property. This is the highest risk of the whole area. It's not even called investment. It's called speculation. Why are you speculating? Because you hopefully make a bigger and quicker buck. That's why it's leveraged. But the downside, if you're driving a lot quicker, 250 Ks, is you will beat the next guy getting to Cape Town from Durban. But the risk you take is you might you might have a car problem. You know what I'm saying? So to overcome that risk, you do have to take through a few things like stop losses, make sure your volumes are correct. So if it does knock you, you're in the game to carry on. If you're not, that is clearly you're overexposed. And that's as simple as that. Please, I hope everybody understands that. But well, it's just fair value. It's just, sorry, Sam, it's just basically what it says. It's fair value. I'll go back to what something familiar with is a property. Call a house, flat, doesn't really matter, property. It's on the market for R1 million. Do you think that's fair value? You might turn around and say the area's good, the house is good, the property is good, everything's good, but it's not perceived as fair value anymore. It's perceived as overvalue. So that's what will bring that price down, because it's not a fair value. So, yeah, okay. Then it comes off to 650,000 Rand, and then suddenly people queue up to buy it because it's considered more than fair value. It's undervalued. More or less that, yeah. The problem where it comes in, everyone's got a different form of value. I'll use cigarettes, for example. If I had a box of cigarettes and it was your brand, and I said, here it is for, and you're a smoker, and it's a good brand, and I said, it's going for 10 Rand, you think that's fantastic value. But if you're a non-smoker, you think it's a complete rip-off because there's no value to you. So again, it's in the eye of the beholder. You know, you might buy that painting and spend 50,000 Rand on that painting, and Joe Soap, your mate, might come up and say, you bloody out of your mind. I wouldn't pay 1,000 Rand for it. But so it's perceived fair value. It's not that easy to quantify, but overall, that's generally speaking what it's supposed to mean. Okay. Yeah, Phoenix, I'll go back to your name there. I want these questions because it's not just answering yourself, it's answering other people who might be sure or might be a little bit shy to ask. And maybe over-explain because I want people to be on the same page. I don't want to go in with a stomp, go out with a stompy, and then they're reacting correctly to it. Okay. Hope that makes sense. But that's what we do. Now, somebody asked earlier on at the moment about strategies because he said, I'd like to know more about strategies. But is the trading room the right place to ask about it? Thanks you, Sam. That's what we want. If you understand it, a thumbs up or a thumbs down. If you don't, I'll reply again. Perfect. Are you here? I'm not sure you're here because the question asked this morning was, is this the right place to discuss trading strategies? Don't think you're on there. If you are, please let me know. And I said, absolutely.
Sorry, good morning, everyone. I'm here, Mr. Roach. I was just waiting for you to explain the signals you gave out. Then I was going to ask.
Oh, you're a gentleman, a scholar. Oh, I like it. Good stuff. In other words, you're getting the point, sir. Priority is explain what we've already done. The next thing, any new trading signals. Then we got to, because that takes precedent, as mentioned. Well done. You listen, good stuff. Then we get a time in between. We got those signals out. We haven't got any more. That we get much for this rather iffy market. But if we have, and somebody comes in, it could be Feed, it could be Sam, it could be Ebenezer, Al, whoever it is, comes in. Can we look at the euro dollar or something? Have to stop and look at that. It takes precedence. We all understand that's fair enough. Now we can talk by looking at Australia. This is the correct place. We want to look at it. Now, the thing is, what I'm trying to do, and I explain it. I'm sorry, Farney and company can start yawning a bit, but other guys need to understand as well. So I repeat myself for the people who go there, cut a bit of slack for these guys who need to know. Now, I'm going to start off with the obvious. You've got to have some sort of strategy. You can't trade on a whim. That is just if you want to give money to charity, Don't give it to the market, give it to your favorite charity, because that's what's going to happen. Right. Now, so what strategy should we use? Now, then we can come through all these fantastic strategies. You guess you go to the App Store and you see all of them, and you think, my goodness, heaven, because some are pretty complicated. And that does that, and this does that. My goodness, I'm starting. What have I got myself into? So I'm going to go back to basic psychology. Right. You look at the ceiling, right? That's pretty damn obvious. Well, if it's a concrete ceiling, it's not a piece of paper up there. It's a piece of paper in your ceiling, and you put it together with inferior glue, and a bit of a hailstorm comes along, you're going to get drenched. It's not much of a ceiling. It's a fairly weak ceiling. That's what we call the old glass ceiling we talked about. In this case, even weaker paper ceiling. We're going to go back to a good, strong concrete ceiling. Now, a concrete ceiling means it's a very strong resistance. So you can't just bang your head against it. You'll break your head. It's a strong resistance to break up. So you can see when you look up in your house, I hope everyone's got the same sort of property you're staying in. When you look up, you can see that strong ceiling there. That is resistance. Now, is anybody there look up, say, I can't see the ceiling, and you're in a house or a property with a ceiling? Because if you say, I can't see the ceiling when you look up, and you are living in a property with a ceiling, my strong piece of advice is to go immediately. Don't drive, it's dangerous, but get someone to drive you there. It's to a very good optometrist to sort your eyesight out. I'm being facetious to try and make it a bit of fun to understand we complicate stuff unnecessarily. Okay. Right. So as you know, guys, finding company, I do an enormous percentage part of my strategy around support resistance for that simple reason. Are you with me so far? You're sitting next to and you're driving along, a youngster sitting in the front seat beside you, and you see a bloody great pothole in the road. It's blatantly obvious a bloody pothole in the road. So if you keep on driving, you know what your bloody passenger's going to say? Stop it, stop the car, because it's obvious. Now you get other things going on. To add that project price needs to be balanced in order to reimburse the project to come back and yeah, that sort of thing. Close the gap to get back to balance. It's overvalued to come back to undervalued. Absolutely. So far so good. Right. Where was I? Okay. Right. Now you get little potholes on the road. These are smaller areas of support resistance. Okay. The problem with that, they're not so blindingly obvious. They're easily missed. Now, that is support resistance. That's why, without doubt, I'm not talking about fundamentals here, news releases, CPIs, non-farm payrolls, PPIs, all this stuff on the economic calendar. If you haven't got it, let me know and I'll copy and paste it and put it on the chat line. Takes 2 seconds. You've got to have it. If you've already got it, I'll repeat it. If you haven't got it, it takes 2 seconds to solve that. Right, we're talking about technicals here. What is the technicals doing there? What's the chart telling you? What the buyers and sellers are doing? What's the buyers, everybody there, I don't care if you're Muslim, or Buddhist, or Christian, with your black, white, yellow, red, whether you're 21 years of age or 85 years of age, as long as you can see, and you see there's a massive, great bloody resistance there, what are you going to do? You're going to exit your position. You're going to take profit. What happens then when you exit your long, not your short, that's the other way around, your short, your long, you're going to sell, aren't you? What happens when you sell? It brings the price down. Right. So that's very, very powerful. Psychology is nothing else. Makes sense. If you can rationalize the concept, it makes sense. Then you get other guys that believe in a moving average, a 5-day exponential crossing of 15. Because they use it a lot, sometimes make money out of it. I'm not saying they don't, but a lot of people psychologically will justify what they've been doing. If you go to a store and sort of go off to try and get the psychological aspect, and you haven't bought the product, I can talk you out of it pretty quickly. But if you already bought it and I say the product's no good, you'll justify you bought that product psychologically, okay? So they will justify that 5 crossing that 11 or 21 or whatever. But everyone's using different little moving averages. They're using a 16 crossing a 21 or a 10 crossing a 35. You get it. A lot of guys who use a consolidated channel indicator or the Williams percentage, or the daily average range, or the true average range, or the net average range, or the stochastic, they're quite popular, or the relative strength with different algorithms, as the MACD, again, with different algorithms. These are all small potholes, you get it? So that's why I don't crowd my chart with it, because some will be missed. Then we get the next one, which is an important one, is the Fibonacci extension or retracement. Don't worry about extension right now. We'll get one step first, the retracement. That's important, because that's another area of either to get back in when it's retraced or support resistance. But normally a retracement is usually an area to get back in again. So you've gone up, it's hit the ceiling, couldn't break it, you've taken profit, and it's still strong, it pulls back to have another bash at breaking through that ceiling. When do I get in again? You use a Fibonacci retracement. When it bounces off that Fibonacci retracement, you think, here we go. Not on its own, you want a bit of support there as well, but it's another strong area to get back in again to have an attack of the ceiling. So far, so good. Another powerful one is the trend line. I'm mentioning it third on purpose. You want to go with the trend. Okay, so you see the trend line's down, it's a downtrend. You want to go up, you're going with the trend. You want to go with the current, the tide. You don't want to swim against the tide, clearly, hard work. The problem I have with trend lines, I mentioned before, is people take it from three different places. They take it from the top of the wick, they take it from the top of the body, and they take it on a line chart. What do I mean by that? Let's give you an example. Hope if you're getting this, because it's quite important, this. Let's take this trend line here, right? I'm using the wick. You with me? There's the trend line. No problem there. Happy, joined it all? Right. Now you've got that. That's Sam doing this. Now we've got Zakuli. You've seen the name in front of me. I'm not picking on you guys. Just that be there in front of me. Now Zakuli doing this one. And he, no, not the wick, mate. You're all wrong there. We're going to do the body. So he'll take it off the body. So there we go. We get a trading going off the body. And then who else is on there? Let's have a look. Pick on Phoenix. There we are. Hey, Phoenix, bring you into the conversation. Remember Oscar Wilde's, but we talked about the not being talked about. So we'll bring you into this and we'll put you on where's the line chart? Where's the line chart gone? Oh, here we are. Now we're going to do another one. Here, we're going to do one here on the line chart. Put a trend line in, and we're going to do one on the line chart. And there we go on the line chart. You get my point? Now you're right, but which one are you going to respond to? The line chart guy's going to respond to this one, and he's going to sell short or exit and see it continue up. Same guy for this, same guy for this. Do you understand what I'm getting put? So as an equally good argument made for all three. Nobody's 100% correct. That's why I like the trend line, but they're limited. Where I have a problem with indicators, and I'm certainly not against them, it can be for when they don't conform. In other words, what do you call it? When it gets the oscillator, the MACD and the stochastic and the illustrator called oscillators are not confirming. The price going up, the oscillator is still looking slightly down. That's what we call negative divergence and vice versa positive. They have some use. But the problem is they're getting their information from the price action, which has already been established. I hope it's not going complicated. I want to go to the next step. Trading is not about what has happened now. We know what's happened now. The price at the moment on the buy is 28. We know that. So that's discounted in the market. The whole thing with trading is we're looking at what's likely. So we're getting an interest rate decision coming out in December, but the guys are looking forward to say it's unlikely it's going to be increased, and it's likely something by March, April might get a decrease. So they're taking positions on that expectation going forward, not what's happening now, because we know what's happened now. Are you with me? So that is really what we're trying to say is look at what's like to happen to get in an entry, not get information what's already happened, which you get from an indicator that's told you what's happened. The indicator at this stage, look at that green candle there. I promise you, by the time that candle got to there, and you look to indicators, do you think they'd be pointing up or down? That is called a rhetorical question. It means the answer is obvious. They will all be pointing up. So look at the indicator, tell you it's pointing up. It's telling you something you already know. We want to know what's going to happen. Where's it going to go from there? Is it going to go to 35 or 25? I'll save you time and hassle. I don't know. Nobody knows. Nobody knows that. We're trying to take a view. Are we going to take a trade stop down there and TP up there? Is the viewpoint likely to occur? That's what we try to take a view on, and that's why I say it's broken through technical damage by breaking through this line here. That's that 100-day moving average. Is that, or yeah, this is 100-day. Yeah, make sure I got it correct. It's a bit similar to the blue one, hey? That's what I look at. Now, you can ask questions afterwards. It gets a bit much. Now, you're going to turn around and say, that's a bit of a contradiction. You say 11-day moving average. What? Why am I using those? No other reason, because they're self-fulfilling. Why are they self-fulfilling? Because so many people use them. If everybody goes and eats McDonald's, what's going to happen to the share price? And you come along and you're a vegan, you say it's bad for you and you're killing poor little animals to do it, etc. But that won't push the price down. And the food's got junk in it. It's not good. It's got fats in it. It's not good for you. But people are buying, it'll put the price up. Do you get the idea? So because people use these two moving averages, the 200 simple, not exponential, and the 50-day simple, so extensively worldwide, they become self-fulfilling. And people, if it's self-fulfilling, react to it, like you see the big pothole in the road. That's why I have it up there. If everyone's changed over at a flick of a switch to the 25 and the 85, I cancel those two and put those two on. Not because I think my opinion's irrelevant. That's what people respond to. So I keep it simple from the point of view is putting in the 200, the 50, absolutely. And then my opinion, this is also pretty important. The shorter is very debatable. You have equal, if you're happy with the 20, do it. 15, do it. 5, do it. 8, do it. It's up to you. That's just my opinion. It's not that important. These two are very important, fairly important. It's okay. Okay, so if you want all four, might as well have them. But these are the ones you pay major attention to. Okay, they act as two things: a filter for whether it's strong, neutral in between the two, or a weak below. Right, you say that's fine. So now I know it's a sell. I'm looking to sell the rally because the sell don't just jump in. You want to see if it's going to go up, and then it bounces off. You sell it. Either way down, you buy. Up there, you sell it. This way, you're looking more to buy instead of selling it. Now, when I talk about technical damage, because it popped up there, and I thought the dollar was undervalued, I thought it was not fair value, gap or whatever, and fair value. I thought that, hang on, it's a round figure, it's got a bit of resistance there. Dollar's been undervalued, and the pound still got a lot of problems going on there. I thought it's a bit weak at the moment. Here's a chance to sell it. Fortunately, it did come off beautifully, and then it bounced up again. That's why I said technical damage, because it didn't halfway through, it opened above this one here. So it's now gone from the, well, sort of neutral here, really, to be fair, but slightly stronger zone there to having all three in its favor stronger. So now I am nervous. Okay. Now, when I'm doing that, it sounds a lot coming at once, but this is not brain surgery. It's just you heard the first time, like driving a car, but most can drive a car without thinking. First, it looks complicated, just a bit of practice. In fact, you can add stuff to it, but get the foundations correct, and then you can add in your little extra indicators. You know, furnish the house, but it's no good furnish the house if the foundations aren't strong. It all falls down on top of you. The furnishing in the house won't save you. You know what I mean? So that's the basics of what I do. I keep an eye on the fundamentals. I'm not going to go in with a massive fundamental coming out. If a bomb goes off and being ridiculous somewhere, I can't control that. Now, what is the problem? Unfortunately, once you got that strategy in place, why does it sometimes go wrong? Why have a stop loss? Is because the major problem is emotions, and emotions are often unfathomable. We have greed and fear amongst all of us, but we have different size comfort circles. We have different size fear, and we're frightened of different things. George is frightened of that, but doesn't really worry about that. But Mary is frightened of that, but not particularly worried about the other thing. So some will say, what do you worry about? That's not very important. Well, that person is important, but to you it's not, and vice versa. So these fears come in, and that's why you get a lot of emotional trading. On your own, it doesn't matter. But collectively, when you've got several million, I'm not talking institution, million retail people, men in the street, the retail markets, the man in the street like yourselves, trading, a large volatility and movement is just emotionally driven and often unfathomable because it's based on fear and greed. And that's why you get some strange market movements, which aren't, that's why it can be difficult. That's what's happened at the moment. It's not the technical, it's not the fundamental, it's basically lack of direction, indecision, and emotional results of it. That's why sometimes it might be idea to stay back or take smaller positions and be very wary. Does that make sense? But the overall practice on the area of chart reading is to understand what makes up the market in capitalism is simple as this: buyers and sellers. And that's why you get the noise. We're going to go to a 1 minute chart here. You must get this concept. Otherwise, you're going to be trading blindly. We've gone from 1 day to 1 minute. Doesn't matter what chart you get. You're not going to get greens and reds. You're going to get greens or reds. You're going to get greens and reds. That's people getting and getting out for whatever emotional, rational strategies they're doing, entirely different. Each one has their own moving around. So noise we can do absolutely nothing about. We can't pick bottoms or tops. We take a view and then we have a strategy. Right is going against, but you got your stop loss here. I mean, it's 180, I think it is. You got your stop loss there. You're worried about technical damage. That's rational. It's not emotional. But we hope there's a bounce and maybe it'll come right. If it doesn't, you're going to be annoyed, but you got enough money. Otherwise, you would have done it. You got your volumes correct to go on to the next one. Will the next one be a good one? I don't know. You might get 3, 4, 5 bad ones. You might get 5 or 6 good ones. Over a period of time, give it 6 months, maybe even a year, you should get hopefully around about 60% correct, 35 to 40% incorrect. That's the way it goes. I don't care who you are. When you get guys talk about 90%, then I wonder about the person telling you that. I query that person. Have you had experience in trading? And guys like Gerard and a few other guys here probably do the same thing. Guys with experience in trading would probably question a guy who comes up to you and says, my system gives you 90%. What I am probably saying you, the guy send the system to you and the profit he makes out of sending to you is where he gets his money, not from the system. I'm guessing, but you know what I mean? I'm doing this for a while. And it's not just me. You ask anybody around the globe, these systems which give you 90% make money for not you, for the person selling it. Okay. There you are, Zeph. There you are, Zeph. And Zeph knows what he's been trading. When he says knows he's doing, nobody knows the price is going up. Just say a guy knows he's doing it and say, oh, great, Zeph, we'll go up to 2000, we'll come back to 1970. Don't expect that from him or me or anybody. Won't know that. We'll take an overall view. Okay. But that's the basis of it. We can go on a little bit more. Oh, right, sorry. Correctly, Rod, to add that price, Roger, price needs to be bounced. Oh, yeah, we saw that before. So that's the basis of it. I'm going to take these trend lines off because you don't want a cluttered chart. You'll see information that might be misleading. I just want to use that as an example. But overall, with a bit of practice, I'm going to show you an example now. What should you do? EUR CAD. We haven't looked at that for a while. Bang that on. Right, I just banged it on. I can look at that and immediately... yeah. Yes, Seth, indeed. Okay, where I'm on the data. Yeah, immediately that should blast maybe a bit of practice at you that it's above not only the 50, the 200, but the 100 and the 10-day for what it's worth, right up there. So you can see clearly the euro at this stage of the game is much stronger. Where's in the buy or sell zone? Well, obviously in the buy zone. So does that mean we're going to buy it? Well, let's just take this thing out of the way so we can see what's going on. What do you see there? You see, this is today's candle. Yesterday's candle, tracked a few sellers. You can see that. Way back in, where was this? May, a few sellers. Get the idea? So it battled to break up. It might do so, but would you buy it there? Even though it's in the buy zone, when it's pretty close to a ceiling. I'm not saying that's a concrete ceiling. It's got 4 or 5 areas there. It's not like 10 or 11 or whatever, but it's a pretty reasonable ceiling. So who was it again? Forget the name of the person there. It was yourself who called me today. It's Simpiwe. Simpiwe. Sorry, Simpiwe. Yes. It's quite a common name, but you get Simpiwe, Simandili. You get it. Sorry, beg your pardon. Simpiwe. Okay, right. So where was I? Yeah, okay. So Simpiwe, I'm going to ask you. You don't know anything about trading. You've just started, etc. Doesn't matter, because I'm going to ask this one question. Don't care who you are, what religion, where you live on the planet. You see here, do you see a bit of a high or a bit of a low there? What do you see? A bit of a high, correct? You with me?
High.
High, clearly. You don't think that's low, you think it's high. Do you think that's close to the ceiling? No. Sorry, do you think that's close to the floor? No, it's close to the ceiling. Do you think that's close to the ceiling? No, it's near the floor. Get it? So my question there, when you buy, do you buy high and sell low? No, you buy low and sell high. Where is it now? It's high. So would you think it's a good idea to buy it there?
Not a good idea at all.
You get my point. That's what I'm trying to simplify. So you don't buy it. So it continues up. Well, you didn't know it was going to break through the ceiling. You don't know that. So you're not wrong by not buying it and you're missing out. In fact, if you did buy it and it did go through, you made a couple of bucks, but I would tick you off. I say, Simpiwe, you're in trouble now, my friend. A custard virtual pie is going to be hurled at you because you bought and got lucky. You will not continue to get lucky, if you see what I mean. I'm trying to make a joke, but you get my point. Okay, so, right, that's the idea. So now you turn around, it's at the ceiling, so it must come down. Now sell it. Not necessarily. It might come down, but it might break through the ceiling. So that's where the word confirmation comes in. Okay. It's always a bit nerve-wracking to sell short a very strong high up momentum. Since September, October, November, nearly about 6, we call it 7 weeks, it's gone up. How many pips is that? Nearly 900 pips. That's a hell of a move. Okay. There might be some profit-taking selling come in. There might be a few guys out who just, well, that's their strategy. It's a bit, I'm going to sell it. But a lot of them do that. So it's going to count as a bit of down movement. So it might get a pullback. But how many people are going to sell it? How much is the pullback? We don't know. The strong trend is there. So you might want to say a quick in and out sell, but it's very, very risky. Certainly you're going against a strong trend. So what would you do with this? You would probably say, I'm going to wait for it breaks out and then look for the next floor above. So it's broken out to the ceiling on the 3rd floor. Then we can now aim the 4th floor ceiling, or we can see if it pulls back closer to the floor of the floor we're in. You with me? To buy it again, to attack the top, the ceiling again. Now, we don't want to buy at the ceiling. We want to buy at the floor of this room here, or break through and buy at the floor of the room above. In a nutshell. Okay. Does that make sense? And number 2, remember, be rational, but understand emotions are often irrational, and there's a very large amount of money and millions of people trading. I can be honest with you, with the advent of the retail trade exponentially increasing since COVID, whereas a large amount of irrational emotion trading is their strategy rather than rational. And that's why for even the pros, it's quite difficult because you don't know if somebody's going to suddenly jump out in front of you when you're stopped at the robots. You know what I mean? Why do you do that? Well, I don't know. It's always a good idea. That's their strategy. You get the idea. Or if you play blackjack, you got 18, you double up. Why would you do that? Well, I don't know the rules, so I thought it was a good idea. I wanted another card. I mean, that's their trading strategy. I'd be ridiculous, but you know what I mean? And that's why you get these funny movements sometimes, which I say go figure. But that's an overall what I do. I want to take you through another one. I'm going on a bit boring. I want to move on to something else. Ebenezer and Company, and finally, we can do it with pleasure. Because I know these guys know that. Let's take another one. GBPNZD. I'll look at that for a while. Just trying something different. Where are we now? Right. 200-day moving average. Where's the 50? The blue line. It's between the two. Where's it? Neutral zone. And also it's below the 100, which is quite useful. Neutral zone. Right. So we can buy it or sell it. It's not particularly strong upward or strong downward. Got it so far? Al, I don't know how long you were trading, but that's so spot on. It's scary. This knowledge here is inferior. Oh, thanks very much. Okay. Well, maybe you're not spot on after all. What's ICT trading? If you think it's inferior, that's up to you, but I'm going to carry on anyway. Right. So anyway, before and then we can discuss that with pleasure. Okay. Right. So now that's come down to support. You get the idea. I'll put the price back on again. Then you can say, right, is this a chance of bouncing on that support for a range trade upwards? You could make technically a very good case for that, to buy it, to take it up there and take a stop loss down there. Okay, on the look of that. Does that make sense? Okay. Right, if you think that is inferior, I'm quite happy. I'm not going to get up, but I'd like to know why. What would you think? I'm not quite sure ICT that is, but maybe you've got something we can add to it. I don't mind eating humble pie if we get something better, because we want to get trades obviously better. What do you think we should be looking at on this one then? Maybe you can unmute if you like, and we can all learn from it. Why do you think something to say? Because I do agree one thing. Don't sort of mix strategies. I always say if you play golf, you know, you're on the golf course playing for money. That's not time to learn new strategies. That should be learned before you play for the golf game. You're in a competition. That's not the time to learn strategies. That you learn it when you're on the golfing range. Absolutely, I agree on that. So this knowledge here is inferior. In what case? Because I mean, that's a fair comment, but you know, you've got to back it up by giving why. So we can all learn, not to sort of get all upset, but so we can learn from it. So I certainly want to be teaching guys inferior knowledge and then go to somewhere that's better. I'm quite happy to say that. What do you think we should do to improve that? Do you think we what can we use this particular chart to see a buy or sell or leave it alone? What would you think we can do on this one? No answer? Okay, we'll move on then. Okay, right. So that's an area there. Technically, it could be a buy once you got a confirmation. So let's have a look by zooming in a little bit. Is that enough confirmation? Not really as yet. Try the 4 hour. A little bit of buyers are coming in. Could come a bit further down. We can look at the hourly chart. A few buyers are coming in. Let's just scrunch it a bit. Yeah, it could come back a little bit further down here. I get that. But the point I'm trying to make is, technically speaking, we could get a bounce from a range trading perspective. And it's in what I call the neutral zone. So you can buy it or sell it. So in this case here, look at the pound, the NZD. Pound is not that strong. NZD is not that strong. It's fairly risk on. It could be a bounce back up again. This could be a range trading, and we've got plenty of meat on the bones. There's about 200 pips there to look at it. You could even try on the 4 hour chart to, the problem is in the 4 hours contradictory, it's slightly on the downside there, but the support in the 4 hours holding, you might get a bounce back up there. Okay, so that one be looked at. I'm a little bit uncomfortable at the moment, to be honest, but I think there's a possibility, technically speaking, we could get a bit of a bounce up that one. Okay, any comments on that, guys? Just took this one arbitrarily. This is a strategy we're talking about. We could all join in and learn stuff. What do you think?
So, Mr. Roger, it's considered as being in the neutral zone and it's between the 200 and the 50.
Yeah, the neutral zone is there on the daily, but let's look at the weekly quickly. Anything to tell you there? It's clearly much stronger on the weekly, and with the bottom of the range, you see that quite strong there. The 4 hour is slightly conflicting. Okay, it's slightly conflicting down there. It'd be nice if the 4 hours up there, and then it'd be quite a nice one technically to go for. That's a slightly conflicting one, which makes you a little bit nervous. But I would say if you're going to go for this one, I would prefer to buy it there than sell it there, if I'm not going to leave it alone, basically. Okay. Any other input? Farney, Gerard, Dion, Ebenezer, Edwin, Guy, Anthony, any other input there? Guys have traded before as well. Anybody can do it. I'm just saying, guys traded before. Any input? Zeph, what do you think? Vilna? Anybody? What do you think? Need a bit more confirmation. Plus, I think so, but I hear you, but I think there's a bit of confliction there. Because I only think personally, I think again, his emotion holding us back a bit. I need a bit more confirmation. I'll get you on that one. Is there enough? Let's try the 15. It's not even a fully formed 15-minute green candle. That's still, what's this now? 8 minutes old, this candle. And even then, it's not fully green. So it pushed up a bit and the sellers came in. So we've got no confirmation yet. But assume we got confirmation, if we weren't all a bit nervous of the funny marks at the moment, we might say we'll go for it. But because we haven't got any confirmation, a very, very short period of time chart, I would agree, I'd leave that alone. But I want to get an idea of where we're coming from here. So you think it's okay for confirmation on that one? Okay. Okay, a guy's just had a problem on the Dow. He's got a small account and he didn't go on the micro, went on the normal one. Now he's having a problem. Remember, guys, I want to point this out. Do not trade the Dow or the Nasdaq on the normal. You've got to trade the micro unless you got 5 grand or preferably 8 or 9 grand or above. It's going to be too big for you with the wide stops. Okay. The micro ideas are sent out. Will never be the normal one. So if you're going in, it's a 60 rand of 0.01 risk. It's going to be 600 if you go in the normal one. And a guy with a couple of grand is completely overexposed. It's just had a flash on there. Didn't know what he's done wrong. He's gone with the wrong Dow. Okay, we'll have to explain it after the trading meeting. Just remember that. Okay. All right. So yeah, we'll move on from that. Anything else you'd like to discuss on that level? Does it get any more clear then, Simpiwi? If it's not, please say so. You don't have to get first time, second one. It might be a bit ambiguous or gone in too quickly. I'm quite happy to hear that. What do you think?
Yeah, thanks, Mr. Roach. I'm just going to go through the video again up until I understand, and then I'll come back.
Okay, fair enough. That's another good point. Go to the video, have a piece of paper, jot a couple of things down, and then we can discuss in here. And if I miss something, one of the other guys, a lot of guys have traded here before, they might pop in and answer a couple of questions there. May I see there's room for sellers just to take those buy limit orders below them on? Could well be. That's a good point. You know, stop and buy limit and all those sort of grabbing that sort of. It could well be that. Yeah. Yep. Anyway, that apart, it just hadn't got enough confirmation in a nutshell. Who said that? Yeah, Antonio. Yeah, I'm totally with Antonio on that. I would not go in on that. I see that, technically speaking, as a possible range trade buy, but I wouldn't unless I get confirmation. As the sales are coming in too quickly on the 15 minutes, not even 15, it's actually 11 minutes old, that candle, and it's got no legs before the sellers come in. I would leave that alone. That is just not confirmation. Okay. I mentioned about Fibonacci retracing earlier on. Just because it comes down to 618, don't put a buy limit in there if you're going long, because it could go through that. You need a confirmation bounce. Okay. Okay, have you all got the dollar index for sure? Have you all got the dollar index? Because the dollar index, look at it's very sideways at the moment. Very much in a range. That's why I'm seeing Zeph. That's why possibly with that one. Okay, you want to look at NAS and gold? Right, NASDAQ. Okay, it seems to be holding around about the 16,000 level I mentioned yesterday. It's risen a hell of a lot up, as you can see by looking back here. When was this now? 27th of October, 27th November. It's about a month now, isn't it? Yeah, just under a month, about 3.5 to 4 weeks. It's gone up by wow. Mr. Nas is far more volatile. Nearly 2,000 pips, about 1,800, nearly about 1,900 plus minus, not exactly. You know, pips has gone up in less than a month. So it's a hell of a move up. Pushed up by a lot of some CPI more than the good news in any stocks, in my opinion. Do you think they might attract some sellers? I think good chance of doing that. We're in the Dow at the moment. I think be a little bit nervous again on NAS as well, especially with the NVDA coming out. As quite finely pointed out, it's a big enough company could affect it. To come up with some fantastic profit or whatever, when it comes out of the fundamental, it could drive it further up. So I'd be a little bit on the wary side of that. So plus you're in the Dow as well. So I wouldn't jump in just yet unless you specialize on NAS, you haven't got any Dow and you feel it is a bit overcooked. That's your choice. But otherwise, I'd be a little bit wary. But I personally think unless we get some fantastic news coming out, it's due for a pullback. Okay, so I'm keeping an eye on that. For that reason, in other words, I ain't going to buy it now. I'm waiting for the NVDA release, see what happens. I'm looking at the possibility of the downside. Okay. What release is this now? Oh, NVDA. Sorry, beg your pardon. Not quite sure. I think it might be after trading hours. They often do that. Anyway, Americans are all asleep at the moment anyway, so it's not now. It might be when markets open, but they often do this after markets open. Good point. I don't know the exact time it's coming out. Good point. But I know it's coming out later on today, but sometimes it's after markets close. We shall see. When I say markets closed, remember it's 10:30 our time. It's about 11 our time, about 4:05 their time. So probably released about 6 o'clock at a guess their time. Okay. You can't get in now, it's closed. Thanks, Zeph. There you are. After 5. So after markets close, they'll release the data. So it doesn't play around with the market. So you know what I mean? And then what will happen once the data released, the price action will only react the next day on opening. No, you can't get in now. I keep saying this, guys, you can't get a no-brainer. If you know it's going to be fantastic news, well, you know, who's going to sell it to you for you to buy? If it's going to be terrible news, you can't sell it short because you can't buy it off anybody because no one's going to sell it to you for you to buy it, or vice versa. Or if you're selling short, you can't do it because there aren't any buyers to go the opposite side. You get it? You've got to have someone who thinks you're wrong. And if everyone knows it's going to go in a direction, no one's going to think you're wrong. Why would they do that? You can't get the product. Bear that in mind. Just remember, guys, you cannot trade shares till 3:30. Another person calls up again saying there's somewhere on the system he couldn't place the order on a share. You cannot trade shares till market opens 3:30. Sorry, guys. 4:30. Hour change. I forgot that. Get the habit. Okay. All right. So answer that. We've done the NAS. Gold. Right. Gold. Well, the target we're seeing at is around about the 2010 mark, I think. Around about that level there. Let's have a look. 2006, maybe around 210, something like that. Maybe between 2000, 210, something like that. It's trying to get there. If it gets there and we get any dollar strength, obviously I'm hoping for, and we certainly get any yield strength on the 10-year note, then there's a good chance you can get a bit of a pullback, profit-taking pullback, and maybe a decent move down with some short selling. So leave it alone for the time being, but it might get a bit of noise around the 2000 mark. There's quite a psychological resistance at 2000. You might get a pullback there, but if it pushes through and the dollar doesn't go below 103 and the yields don't suddenly go any lower than they are at the moment, that might be a good chance to sell it, because if nothing else, you probably get a bit of profit taking there. So there's a chance you might get a short round about these levels, but I don't see a trade for it at the moment. Okay. Okay, good stuff, Kia. Okay, right. Let's have a look. Okay, let's have a look. Just look at the 15-minute for you. See, it's trying to come off. Give you a juice. See what happens. Okay. Anything else? CAD JPY. All right. Looks like we jumped a bit. Okay. Bug it up. I thought that would hold, but clearly not. Sorry, guys. That was bad. What are we going to do now? Euro CHF. 76. That's about break even. That's not a problem. Euro AUD 66.80. That's come off as well. Well, let's hope it holds there and bounce off that level there. Often area of support. It bounced off earlier, so that's why it already bounced off. We got it there because we thought they'd held and bounced off. It's coming down again. Question is going to break through. I don't know what's going to drive the Aussie dollar push quite a strong euro down there, but we shall see. But hopefully that's going to hold and push it back up again. Okay, GBP seem to be pretty sideways at the moment, so it's not looking pretty. So yeah, try to hold on to the confidence, but maybe it'll get a bit of pull. It's hovering around these levels. See what I mean? It's fairly side round about there. May get a pullback. Okay, not a good one, but we've had good ones. Remember, guys, we've had a very good one before. Don't suddenly chuck your confidence out the window, and don't get over cocky when you get good runs. Get good runs, you think you've solved it. You get bad runs, you think you give up. Try to put in perspective they're going to happen. Okay. Okay. Any question, guys? Okay. I've heard of the company, that's about all I know. All I know, so probably won't be able to tell you much about the company at all. Let's go on the daily to have a look. Start with the weekly if you like. Just wait for the information comes through. Clear. I've never seen it. We'll never trade it clearly. Otherwise, the information will be sorted out. Give it a moment. Thanks, Lorato. What about deer for a short? Don't think it's been in existence long enough to get a 200 by the look of it. But we'll try the daily. No, it hasn't. Remember, we haven't had the shares in the US on the. Remember, on the weekly, it's a 200 times a week, and we haven't had that long. So that's why the 100 weekly only goes that far back, 50 that far back. So we haven't had a 200. I haven't gone that long. So we go to the daily. I see what you mean. Yeah. Technically speaking, I don't know anything about the company, so I can't give any fundamental help there at all. But personally speaking, it seems to be a downtrend. You can see the downtrend. Put the trend line we talked about earlier on, if you like. See a bit of a downtrend there. Something like that. Bit of a downtrend. It's sort of hovering around the 50, but it's a lower end of the trading range on the moving averages. It's about the 10, okay. It's a bit of support resistance there. So from that point of view, doesn't look too bad. In fact, I would say pretty technically, it looks like a pretty good idea. I'm just a bit worried about whether it's going to be effective with the momentum of a movement index later on with a big company coming up with good figures. Does that make sense? Then it can, even though it's got nothing to do with it, those good figures could affect the momentum. But otherwise, purely a technical point of view, doesn't look too bad. Okay, doesn't look too bad at all. We'll try the 4 hour. Any conflictions there? Not really. It seems to be lower lows, doesn't it? Bit of a double top there on the 4 hour, lower lows. Looking for the short, I agree. Doesn't look too bad. Yeah. Doesn't look too bad. I agree. What do you think, guys? I can't really offer much in the camp. Don't think about it. I sort of heard it. That's about it. I've heard a lot of authors. Never doesn't mean I've read the book. But otherwise, yeah, definitely one. Obviously, you have a watch list clearly, but that doesn't matter. We got it on there. We can learn. Keep an eye on it. Might be a possibility. Yeah. See how that stuff comes out today. I tell you what, guys, just be a little bit careful this week because of the close. Remember, it's going to be from about where are we now? Wednesday afternoon to Friday. It's going to be very, very, very. In fact, from Wednesday on, it's going to be quiet. From tomorrow on, it's going to be quiet with Thanksgiving. You take the Americans out the equation for a couple of days, and it's about 70% of the market quiet down. And the NAS will be quiet. You won't get any jumps on opening, all that sort of thing. You know, we all wait for the American opening at 4:30. Of course, that won't be the case. So it might be a bit quiet. So this is something, if you can remind me around point going to the next week, we can look at for a possibility to trade. And if it does work out, thanks very much. As I say, I've never touched it before. We can all learn from it, and we must be open-minded. And yeah, I think it might be a possibility there. Okay, so that's one to keep an eye on. Remind me. Thank you very much. Excellent. Should be. Don't forget, guys, don't expect fireworks for the rest of the week. Monday, I expect to be back to normal. Good stuff. So again, I hope you've all got the economic calendar and the dollar index. If you haven't, let me know and I'll copy and paste for you. Okay. It's very quiet. The NAS is the most volatile of the lot. So look how quiet it is. Look at that. You have to actually zoom in to get any movement. Look at that. Look how quiet that is. Look at that. 11 pips in the last half an hour or so. Almost unheard of on the NAS. So it's very quiet at the moment. I'm sorry, I want to go back. You still here, St. Pee-wee? Any questions on the strategy or anybody else the strategy? We'll go a bit more depth. Now you've got a few ideas. Just say, I got that, but just repeat that. Just a bit of clarification on that. Can we look at something like that? Anything just to, because instead of reading stuff, it's easy. You got to zoom on, then it's a lot easier, more fun to learn that way. You can have your own. Don't change it if you're happy with your golf swing. Don't just change it. But I'm just saying that's basically what I do.
No questions as of yet, Mr. Rolls. We'll just go through the videos, and if I have questions, I'll come back with them. Thank you very much.
You do. And it works both ways, because you might see something I haven't spotted. You know what I mean? There's no harm in doing that at all. Hang on, I didn't know that. Oh, bloody hell. And we can incorporate it. I didn't really do the 100 much. I'd incorporate it because it seemed like somebody's just a good idea, and I like it. So like deer might turn out to be a good idea. So we're all trying to learn here and try and help each other. That's the bottom line. Okay. And that's what we need the most is when you don't have a good run. When you have a good run, that's easy. It's trying to survive mentally when you have a bad run. It's a very, very, very sort of demanding on the intellect, on the emotions, short-term derivative trading. Just remember that. It does take its toll.
Okay, quick question, Mr. Raj. Enough meat on the bone at how many pips movement, if I may ask?
On what? All instruments are different. Some more volatile than others. Which one are you talking about?
Okay, I'd say currencies, not the indices.
Currencies. Okay, let's take one. Let's take the euro dollar. That's the most well-known, most traded in the world. Use that one. Right. We're on the daily. Yep. Let's scrunch it a bit, as I call it. Right. You decide you want to buy this. You see it's above there. At the moment, the euro is stronger than the dollar. Makes a change. Look at this. Look, the dollar was king, eh? Things change, eh? Right. You say you want to buy this because it's in the strong zone. You see upside. And clearly it's in the strong zone. Happy with that. Before you take it, you're going to see, is there enough meat in the bones? So let's just see. Where are you going to put your stop? You've got to put it out of the way. Maybe down here somewhere. That's what, 70 pips stop. Where are you going to put your TP? When's the next resistance? I'll take this out of the way, so it might confuse everybody. When's the next resistance? So put the crosshair up. We got a bit there, a bit there. Maybe we get, if it looks a bit crazy, try a line chart. Might get a bit easy to see. Got a bit of resistance there. We got a bit of resistance around about these levels. The next resistance is around about, it's not that much, a little bit about here. So if I go here, just start here, there's a bit there. 1, 2, 3, 4, 5, 6, nearly 7. Six, call it 7, okay. So there's a bit of resistance at that level there. Can we see it? So what we're going to do then is we're going to go down to market price there, and we're going to see it's around about 38. Okay, so just look at where your target is. So your target is the next high, and that next high is around about these levels here. It's about 30. Call it 40 pips. The problem with that is 40 pips, is that enough meat on the bones? And where are you going to put your stop? Does that answer your question?
Yes, it does. Thank you very much.
Okay. I tell you, there's another comparison. You live in a townhouse complex. Unless you're incredibly lazy and need to go down to the security gate to drop something off, would you get your car out the garage to drive down there or just stroll down there? Unless you're living in a bloody enormous complex. My point is you probably walk down there. There's not enough meat on the bones to get the car out the garage and all the performance, get it started up and drive down the security gate. It's only 60, 70 meters away. You might have just walked down there. Get the idea. Not enough meat on the bones to take the car, not enough meat on the bones. So you look at your target. You're going to make 100 rand out of this, guys. And to pick up your 100 rand, you've got to go and physically pick up the money. And it's 100 kilometers away. It might cost you more to pick it up than the 100 rand payment. It's not worth your while. It costs you 100 rand to get into work, and I'm going to pay you 90 rand a day. It's not worth you coming to work because you're getting paid 90, but never mind the job. It's going to cost you 100 rand just to get into work. It's not worth it. Basically, that's the idea. Got the concept, guys? Okay. As I said before, guys, a lot of it actually is common sense. Where the difficult makes it more difficult sometimes, but these PhDs is the millions of people trading with different emotions, and sometimes those emotions are unfathomable. A lot of people say, I don't know why that guy went and beat up that little kid or invaded that country or did that thing. We don't understand. A lot of times people do things emotionally, but we don't understand. I mean, everyone says, why are we still fighting each other? Why are all these wars have been going on through history? You know, a lot of it we don't understand. And unfortunately, that's emotion on the part of the person. I think personally speaking, I would like to go to a restaurant where they have boiled broccoli and nothing else on the menu. I think most of you probably think I don't understand. Instead of having a fillet steak, I think most of you say, fair enough, Roger, I'm open-minded, but I don't understand. You know what I mean? It's just trying to point out a lot of things, what people do, you don't always understand, and that affects market price in the short term. That's why we have to have stop losses and the rest of it. You're not going to get 100%. But as long as you get the overall picture, get your volumes right, get your calculator. Don't forget, guys, this calculator is not for shares. You're going to do shares, they open different times, your volumes are different, and you need this Excel calculator. And remember, a share, let's go to a share, let's go to General Electric. Right click, left click on specification. The contract size is 1. Where is it now? Where's the contract size? Contract size is 1. If you go to, let's say, Forex, and you go and do the same, right click, left click, and you'll see the contract size 100,000. So you're not going to do the same volume. 0.01 or 0.1 or 1.0 is very large in Forex. But if you went 1.0 on Ford, you're wasting your time. You won't make any money. So you put 1.0 and you buy Ford, F-stop, and you put in a business side of volume 1.0, you won't make any money. But if you put 1.0 on that, unless you have a very large account, you only get the trade, you don't have enough margin. Remember, the contract size is important. Just those little things there. Hope it all makes sense. Okay. Okay. Right. If you want to see the contract size, you highlight the instrument or symbol you're looking at, that turned blue. Then you right click, then you left click on specification, and you look at the contract size. There it says 10. That means it's 10 times, sorry, not on gold at the moment, might have to go on gold. It means 10 times the price of gold is one standard contract. So that says 1988, call it 2000. So it's 2000 on there, and the contract size is 10. Clearly, it's 10 times 2000. So that's one standard contract is 20,000 US dollar exposure. Now, the price of the car, never mind what deposit or margin you put down, the price of the car you want to buy for one car in gold is $20,000. Okay. If you go to GBP NZD, NZD is, sorry, USD is the quote currency. GBP is the base currency. So we buy and sell the base currency. What is the contract value? You shouldn't be trading without knowing this. Very important. Specification again, you see 100,000. What does that mean? It means one standard contract or 1.0 is $100,000. got to get in the rand. We'll use dollars. Okay. So on gold 1.0, it's 10 times whatever. Let's say it's $2,000 an ounce gold. One standard contract exposure is $20,000. On this, it's 100,000 pounds. US dollar, Swiss franc, $100,000 is 100,000 times the base currency. Just make it $100,000 to get an idea. So the standard contract size 100,000. A mini is obviously a tenth of that, and a micro is a hundredth of that. That's the exposure. And your deposit is what the leverage is. If it's 100 to 1 leverage, your deposit is 1%. So 10%, if you're 10 to 1 leverage, the deposit is 10%. So 5 to 1 leverage, it's 0.2% deposit. You just divide the leverage into 100 to get the leverage. Yeah, that's your deposit. Okay, that's your margin deposit. So I go to GBP and I'm going to go 1.0. I'm buying 100,000 pounds worth of currency. That's my exposure, or 2 million rands worth. What do I put a deposit down? Sorry, wrong one. I go to my specification. I go to look at the deposit or margin, and I see 0.003. I divide that into 133. So I put down, to get one standard contract, 0.003. So let's just do that quickly so we all understand this. Sorry, guys, you all know this, but I'm pretty sure most guys don't, so it's important. You put in 100,000, and then you multiply by 0.003, and you come to a figure of 300. That's right. Is that right? 300, 3,030. Yeah, that's right. So it's 300 US dollars will be the deposit. Okay, so that's a 500 to 1 leverage. Well, it's called 5 to 1 leverage, but actually it's 330 to 1 leverage. So if you take one standard lot, your deposit will be $300. But remember, that's your deposit. You're still responsible for $100,000 worth of product. You might buy a car for 500,000 rand, and you only have to put 1,000 rand deposit down, but you've been loaned the 499,000 and you're responsible for the price of the car. Okay, just bear that in mind. That's your exposure. Okay, very important. Are you with me now? And your commissions or whatever charged on a house or car, whatever, is charged on the price of the product, not on your deposit. I mean, if it's £1 million house and you put a 2,000 rand deposit down, they're not taking 8% of your 2 grand, taking 8% of £1 million for the state agent commission. Don't forget that. Got it now. Very important. Okay. That's why leverage works so brilliantly. If it goes in your favor, you put a tiny amount in, it can work brilliantly. But the problem, like driving a fast car, if it goes against you, make sure you got your seatbelt and your airbags on. Because if you hit a car at that speed, it's going to hurt you more than if you've got a bicycle. You've got to give something to get something. The higher the risk, the higher reward, but the higher the risk. They go together. That's why you're going to sort of make sure you take precautions and get your volumes right and make sure you don't overexpose things like that, because it is highly leveraged. You understand now why highly leveraged instruments are profitable if you get it right, but can cost you if you don't get it right. And that's the learning curve we're trying to overcome here. Okay. Clear? Okay, guys, any final questions before we wrap up? We've only got a few more minutes to go. Thank you, Poon. Are we all on the same page? Because a lot of guys say, I don't know what he's talking about, so I'll go and read a book on it. If you don't understand what we're talking about here, reading a book will make it even more complicated. Somehow you've got to get these things understood, the basics understood. You will not be successful at all in trading a highly complex derivatives market if you're battling to get the basics. You see what I mean? If you're battling you're not going to be a car mechanic if you're battling to know what a gear lever is. Okay, you need to get these basics. Very important. All good. Any issues? And don't forget the Ebenezer's, Edwin's, Varney's, this world. Anything you want to add to that, with pleasure, you can do so. We can all learn as well. And remember that our experienced guys yet want to look at stuff. And if they have a trade idea, I think it's a beaut. That's what we're here for. Please let me know. I'll stop immediately onto that. So I'm not here to bore the experienced guys. It's just to try to help out the guys who are starting and obviously confused, because I think they get a class of reading something but I'm not sure it's been explained the way they understand it, because, well, clearly not in some of the questions asked. So we need to get that, overcome that. Hopefully I can help you to a certain extent. Okay. But you do need some arithmetical numerical literacy. It's vital. Okay, if I say 50% per annum return, that's got to mean something to you. If it doesn't mean anything to you, well, it's going to be difficult. Okay, guys, are we good? Anything else before we pack it in and get on tomorrow? Thank you for your patience finally, by the way. All good. And guys like it, Antonio, done it before. Good stuff. Okay, guys, please return. Please support us. And then if you can, see you tomorrow. And we'll see, maybe these will work out. We're having a rough time at the moment, being be quiet. It might be very slow going in, but I hope we can start getting some at least getting a little bit better situation, shall we say. Thank you very much. Okay, all good. Cheers, Ebenezer. Thanks, mate. Thanks for your support. Where are we? Stop the share. Cheers, guys.